What if Bitcoin is not just an investment, but the foundation of a completely new global financial system? Michael Saylor argues that Bitcoin is becoming the core monetary asset of a new global credit system. In his view, we are watching the birth of 21st century digital capital. He describes Bitcoin as digital energy, like fire, like oil, like electricity, like nuclear power. Each of those technologies amplified human capability. Bitcoin, he says, amplifies economic capability. Most decision-makers, he argues, still do not understand this shift. But history shows that crises accelerate adoption. COVID, currency debasement, inflation shocks. These moments force paradigm changes. He points to adoption signals. In 2020, only a handful of public companies held Bitcoin. By 2025, there are well over 100. He believes that number could eventually reach thousands. Another milestone: native Bitcoin support inside operating systems and consumer devices, Apple, Google, Microsoft. What about the criticism? Saylor sees FUD as normal. Every transformative technology faced resistance: electricity, nuclear power, the internet. He separates healthy skepticism from fear-driven rejection. The power of Bitcoin, he argues, is optionality. You can self-custody, use custodians, move across jurisdictions. Compared to gold, which became centralized in vaults, Bitcoin can be held by states, banks, companies, and millions of individuals simultaneously. Then there is what he calls the protocol war. He argues that the future of money is a competition between monetary networks, and for Bitcoin to win, it needs corporations, banks, and institutions to adopt it. You want the most powerful countries speaking your language. This leads to Bitcoin treasury companies. A Bitcoin treasury company accumulates Bitcoin as digital capital, then issues Bitcoin-backed credit, bonds, convertibles, preferred shares. This transforms equity into leveraged digital equity. 20th century credit gives way to transparent, over-collateralized, Bitcoin-backed credit. He describes an endgame where companies hold trillions in Bitcoin collateral, issuing high-yield credit while remaining strongly over-collateralized. Over decades, he expects this to increase global savings rates, reduce financial repression, and push weak credit issuers out of the system. Eventually, tokenization accelerates everything: dollars, treasuries, stocks, bonds, moving at near light speed. But for now, he believes Bitcoin, as a digital commodity, has the cleanest regulatory foundation. Saylor's thesis is bold. Bitcoin is not just digital gold. It is the base layer for a new global credit architecture. And Bitcoin treasury companies could rewire banking for the next century. Follow this channel for deeper breakdowns of Bitcoin, AI, and digital capital.